The price situation is not where our producers would like it to be.
Hi, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Thank you for joining us today. Well, my very special guest today is John Devine, Chief Economist with Cotton Incorporated. He works in Cary, North Carolina, which is just on the southwest side of Raleigh. At the world headquarters, interesting place. If you ever get a chance to see it, I highly encourage it. They give some terrific tours, things you never knew about the cotton industry and research and that sort of thing. I always love talking with you, John, about what's going on in cotton, and cotton has kind of fallen out of favor over the past couple of years here, price-wise. Can you explain to our listeners why that is?
Yeah, there's a couple factors at play. Like I'm sure a lot of your listeners are familiar with all the dynamics that have been affecting the global economy just over the past 5 or 6 years. So we take a look at some of the price movement in cotton. Of course, we've been affected by those. But just to zoom in a little bit more closely on what's been happening over the past year and a half in terms of the cotton market, it is pretty remarkable. It was just a little bit over a year ago, we actually touched prices that are around $1. So for those of your viewers who may not be so familiar with the cotton market, values over $1 are something that we don't see very often, and something that get our producers pretty excited when we do have that. And it was only around late February, early March of last year that we were at those levels, and then the prices that we're at now, around 65, generally to 70 cents per pound, which represents a huge pullback from where we were just a little bit over a year ago. And then when you factor in the increase in input costs that we've had over the past couple of years, it's really made a tough situation for our producers in terms of profitability. So that's just a little background in terms of price movement. But if you want to get into the reasons why that's been happening, at least more recently, I think one of them has to do with what's been happening in the global trade environment. We export about 85 to 90% of our cotton crop each year, so we do have some dependence on the export market. Traditionally, the largest buyer is China. We have worked on our diversification here recently, but China was a huge buyer of cotton from the U.S. and also around the world last crop year. So to put a little bit of color on that, if you don't mind me getting to the numbers, but last crop year, China imported 15 million bales. That can be compared with where we were the crop year before. It was down around 7 million bales. And then this crop year, China's expected to only bring in 6 million bales. So that's a 9 million bale swing year over year in terms of Chinese imports. And, that's just a huge volume of cotton. It's hard to replace that on the demand side. And then on the supply side, we have a bigger crop in the U.S. this year. We're up more than 2 million bales relative to where we were last crop year. Brazil's bringing in another record harvest. And, you don't need an economist to tell you, just going through these numbers a little bit, so it's that, pull back on the import side combined with this increase in exportable supply means competition for those import buyers, and that's put the downward pressure on the market.
Well, it's well known that Brazil has, in essence, really taken a big bite out of the U.S. soybean market. Is that something that you think we're going to continue to see more of? Are they going to keep growing more cotton acres there?
Yeah, and Brazil's really been ramping up the pressure in terms of competition on the export market. They have this double cropping system where they plant short season soybeans and they can follow it immediately with either corn or cotton. So they're getting 2 harvests per year on the same land, and they're able to increase their cotton acreage without really increasing their agricultural land use. And that's where we're seeing a lot of the expansion in Brazilian production, and their production has more than doubled over the past 10 years. And the vast majority of that is going to the export market, which of course creates some competition for us out there for those import buyers.
Well, we had that big announcement the other day between the U.S. and China that supposedly there is a 90-day moratorium on these big tariffs between the U.S. and China. And I really thought that maybe that would take the spurs to this cotton market. And I'm looking at a bar chart here, and it really hasn't done much of anything. In fact, if anything, it's gone lower now. Why do you think that is?
Yeah, I think part of it is that so much of these price effects were already baked into the cotton market even before the announcements that have been taking place over the past several weeks. If you take a look at the trade, I think they were prepared for the potential for another round of trade dispute between the U.S. and China. We had those weekly export sales data from the USDA, And in those data, we do see sharp decreases year over year in terms of our sales to China. Some of that is due to the fact that China's just buying less cotton from everybody this crop year because they bought so much last year. And also, they're expected to have record cotton yields in China this year. So there's just less import need coming from China this year. There was some concern, about the potential for a trade dispute. I think a lot of the traders, both on the U.S. side and the Chinese side, were cautious about getting contracts signed, given the potential for volatility on the tariff front. And for that reason, we didn't have a lot of cotton sold to China before of any of these announcements, so we didn't really see prices move lower. But since prices didn't move lower on any of these trade announcements, I also think the potential for them to move higher after some of these issues became less serious, or at least in terms of their magnitude, that we didn't see price response on the positive side either.
Something that I don't hear a lot of talk about, if any, is the fact that crude oil prices have dropped a lot from where they were a couple of months ago. And for those that are kind of outside the cotton realm, that means a lot more competition from synthetic fibers, which are petroleum based, right?
Yeah, so when we take a look at polyester fibers, they essentially are a form of plastic. So they're derived from petroleum, as you pointed out, and they can have some responsiveness to changes in the crude oil market. But something we have seen over the past couple of years, we're talking about all this instability in macroeconomic events, but what we have seen during that time period has been some relative stability in polyester prices, despite some of the swings we've seen in crude oil prices. And some of the reason for that is that these plants that they use to build, or manufacture the chemicals that go into the plastics that are polyester, um, they're major operations. So once they're built, they tend not to get shut off and turned back on. What that has meant is we've seen some stability in terms of global polyester production. And for some of the past couple of years, that's meant overproduction, which has meant continued downward pressure on polyester prices. Of course, a lot of that's happening in China too, where there's state ownership of these operations. So we don't tend to see um, those operations go out of business, even if the profitability situation is not great for them.
You talked about China. What about other importing countries other than China? I know India is a big user. Have they dropped off in their purchases or not?
Yeah, so India story, there's been back and forth in terms of who's the world's largest cotton producer in recent years, whether it's China or whether it's India. But more recently, it has been more China than India, and one reason for that is that Indian yields have been falling off. They've had some issues with resistance in terms of some of their seed technologies. Also, maybe seeing cotton potentially moving over to more marginal land, potentially in India as well, due to the profitability equation maybe not being the same as it was a decade or so ago. But over the past decade, we have seen consistent declines in terms of Indian cotton yields. At the same time, there's interest in India becoming more of a manufacturing center, particularly when we take a look at the US and potentially some other Western apparel brands trying to move their sourcing outside of China. So all this means is that we may see India evolve into an import market as we go into the future. And we've already seen some production deficits in terms of Indian production relative to their mill use. So that could be an emerging market for us as we go forward.
What about other countries, maybe developing countries such as Vietnam and in that part of the world? Do you see that as a maybe evolving market that could help?
Sure. Yeah. So Vietnam is an important customer of ours already. So we have seen, China has had fluctuations in their import volumes for much of the past decade. And during the past decade, Vietnam has actually been the largest buyer of U.S. cotton in certain crop years. And, for some of the reasons we talked about with India, we could see also some sourcing shift more heavily to Vietnam. And once again, potentially moving away from China, which, could support their manufacturing and their buying of U.S. cotton over there. Another market where we've seen some increase in sales is Pakistan. So similar to India, their yields have been trending a little bit lower in recent years. And we've been selling a lot more cotton to Pakistan. It has been a decent growth story for us on the export front. Turkey also has been buying a lot more cotton from us in this current crop year relative to last year. Some of that's due to the rebound in the European economy, or at least in terms of clothing demand from the European market, where Turkey supplies a lot of apparel exports too.
Well, fingers crossed for developing markets anyway. Talk to me about this year's crop. I understand farmers are in the middle of planting right now. How are things going?
Yeah, so obviously, the price situation is not where our producers would like it to be. Break-even prices now are estimated to be somewhere around 85% on 80 to 85 cents per pound on a national basis. And if we've got, prices out there right now in futures, some around, 65 to 70 cents per pound, that's not making much money for our growers. So with that, there's a lot of hopes that the price situation could turn around. But obviously, the price levels aren't there to encourage strong planting, and we are expected acres to decrease probably somewhere around 15% for the upcoming season.
I know one of the biggest producing areas, if not the biggest, would be in the Texas Panhandle, northwestern Texas, and that area there. There's been a lot of talk about heavy rains that went through parts of the southern plains, but I think by and large, the heaviest rains, the flooding rains, weren't they a little further east to the point where they wouldn't impact that so much?
But they've gotten some rain out there, but as you point out, West Texas very important. West Texas very dry. Irrigation supplies aren't what they used to be out there. So dryland production is the dominant practice out there. And the rainfalls just aren't consistent, and particularly they haven't been consistent over the past several years. So long-term drought has been a feature of that area, which has meant pretty high levels of abandonment in recent years too. Things were looking pretty dry coming in just ahead of the past few weeks. But as you point out, those rains have come through. There have been some areas in West Texas that did get some decent rains. Maybe not the flooding rains that you saw in some other locations, but rains that should be supportive of germination as we get into the planting window for that area. So hopefully they'll continue to get some moisture. And hopefully this year they will get decent moisture throughout the season, particularly as we get into July, August, when temperatures can get hot and can really put a lot of stress on those cotton plants.
Well, we've talked about it quite a bit here on this channel that there's a lot of concern over the ocean surface temperatures on the West Coast that are cooler than normal. And usually that means you don't get as much convection or evaporation off the ocean, and that leads to more of a zonal flow across the U.S. Not as many thunderstorms, and that can lead to a dry condition in the plains. A lot of talk about that. Maybe a longer range forecast into the plains this summer, maybe turning dry again. If that's the case, what do you think the potential would be for the marketplace on cotton then?
Yeah, I mean, something that we've learned to pay attention to very closely over the past 5+ years is moisture levels in West Texas, combined also with the heat levels late July, early August. Really need rains during those time periods to get crop made on those dryland acres. And unfortunately, we just haven't had those in recent seasons. So hopefully this year, those rains will show up. But as you pointed out, maybe it could be potentially another difficult year for us.
How do you feel the acreage is this year compared to what the Ag Outlook Forum indicated?
Well, you take a look at the trend in some of the acreage forecast numbers, they've all been moving lower over time. So, going back to some of the very early numbers that we had that were released even last fall, they were suggesting acres could be, down maybe 5%, otherwise essentially stable with last year. But since then, we have seen some divergence in prices. Most notably, we've seen cotton prices move a little bit lower. And as we got into that important, planting decision window around price discovery time in February, we saw corn and soybean prices being a little bit more healthy, particularly relative to cotton. So all that factored into decreases in acreage forecasts over time. And I think, most of the current projections now are more on what would have been considered the lower end of the spectrum just a month or several months ago. So generally, I think a decrease around 15% is probably what we're headed for in the upcoming season, with a little bit probably a downside risk to that number.
Well, I know a lot of times in the Northern Hemisphere, when we get to this time of year, you kind of keep the airways hot doing marketing trips around the world. Do you have anything pending as far as trying to work with some countries on demand?
Yeah, so we've got a trip coming in June over to Asia. We feature a little bit of South Asia over there. So have some stops in Pakistan. Situation a little too hot, and I'm sorry, not Pakistan, Bangladesh. Situation a little bit too hot in Pakistan right now to get over there, but that was initially on the books. But we'll make some stops over there. Talk about the benefits that U.S. cotton has and hopefully something that will support sales.
Awesome. Well, best of luck to you. Thanks for everything you do. And we'll keep an eye on this market here. I'll probably be checking in with you later this growing season. We'll see how things are looking as we get toward the end of it. But appreciate the input here today. John, take care of yourself. John Devine, senior economist with Cotton Incorporated in Cary, North Carolina. Yep, that'll do it for this edition. Thank you so much for tuning in. Appreciate that a whole bunch. For producer Breanne Jenkins, I'm Marlin Bohling. Catch you next time here on the Comstock Channel. Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.